Hey guys, in this video, I'm going to be telling you exactly why you need to add US30 into your trading watch list. So let's get into the video. As you should know, there are two primary market conditions that you can trade in. Ranging markets, which look a little bit like this, and trending markets, which look a little bit like this. Whilst it may be obvious to some of the more experienced traders out there, you should only be using trend-based strategies within trending markets, and on the contrary, a range-based system within a ranging market. So why has this got anything to do with US30? Well, US30 is predominantly a trending asset, but let's not get ahead of ourselves. Let's rewind a little bit and take a look at what the indices market actually is as a whole. A stock market index is simply a measurement of a compilation of shares. An index tracks and assesses the performance of a specific market category, region, or a country's economy as a whole. The world's top traded indices include the DAX 30, which is based on 30 stocks traded on the Frankfurt Stock Exchange, the FTSE 100, which is based on 100 stocks traded on the London Stock Exchange, and of course US30, which, like the DAX 30, is based on 30 stocks. However, the US30 index is based around stocks traded on the New York Stock Exchange rather than the Frankfurt Exchange. Now you know the different indices, let's look at the top 3 reasons why you should be adding US30 to your watch list. The first reason is that US30's directional bias is almost always bullish. To look at this properly, let's take a look at a line chart showing the price of US30. As you can see, there's a consistent uptrend apart from 2 key periods. The first of which can be seen here in 2008, which, if you don't already know, was the result of the global financial crisis, and the second can be seen here, which was in mid-2020 as a result of the coronavirus pandemic. Other than these periods, we can see a consistent uptrend, which provides a great confluence if you've got a system in US30 and you only decide to take long positions. The second reason is high market volume. Whilst I imagine you've never had the issue of not being able to have an order filled into the market due to a lack of volume and liquidity, there are advantages to trading in a thick market. A thick market is a market with higher volume and liquidity. The main advantages for us traders in a thick market is we are a lot less likely to experience slippage and market manipulation. The third reason is that trading US30 is just simply easier. Now I'm sure you know that no trading is easy, but we can do certain things to make our experience in the market more palatable, and trading on indices, and in particular US30, in my opinion, is just simply easier than when trading on some of the more popular asset classes that beginners tend to trade, such as FX pairs and gold. From my experience, US30 is less prone to fake outs when compared to Forex pairs and other commodities, and here at FXE, we know a lot of traders who found their profitability when moving from trading Forex and gold to trading this asset. So guys, there's a whistle-stop tour of why you need to trade US30. Let us know in the comments if you'd like me to publish my super profitable trading strategy that I use on US30 right here on the channel. And don't forget to like and subscribe as well for more trading strategies, market forecasts, and much more right here on the YouTube channel.